What is ETF? How to invest in ETF in the US for beginners? Do you want to invest in Apple, Microsoft, Google, Tesla, and hundreds of top US companies all at once with just a single purchase? You don't need to pick individual stocks, you don't need to stress every day watching price charts, and you don't need to spend too much money. Everything is wrapped up in one tool called an ETF exchange-traded fund. In this video, I will explain from A to Z what an ETF is, why millions of Americans use it, and most importantly, how a beginner can start investing in ETFs today. Stay until the end because you will get practical strategies you can apply immediately. 1. What is an ETF? ETF stands for Exchange Traded Fund. This is a special type of investment fund that is listed and traded on the stock exchange, operating exactly like a stock. But unlike stocks, when you buy an ETF, you don't just own one company. An ETF is like a basket containing many assets: stocks, bonds, gold, oil, real estate, and even the global market. Examples: SPDR S&P 500 ETF. SPY includes the 500 largest companies in the US. Invesco QQQ. QQQ focused on technology, includes Apple, Amazon, Google, Meta, Tesla. Vanguard Total Stock Market ETF, VTI, covers almost the entire US stock market. If you only buy Apple stock, you depend only on Apple. But when you buy SPY, you are betting on the entire US economy. That's why ETFs are often safer, more accessible, and especially suitable for beginners. 2. Why are ETFs important for beginners? Of instant diversification, buying one stock is putting all your eggs in one basket. If that company fails, you lose money. With ETFs, you buy a whole basket of stocks, reducing risk significantly. Being extremely low-cost, ETFs often have management fees of only 0.03%, 0.2% per year. If you have $10,000, the fee is just a few dollars a year, much cheaper than traditional mutual funds. See, easy trading. ETFs are traded like stocks. You can buy and sell within the day, prices change continuously. No complications, no waiting. D. Transparency. ETFs regularly disclose their holdings, helping you know exactly what you own. E. Flexibility. There are ETFs for stocks, bonds, gold, oil, real estate, even ETFs by themes like artificial intelligence, clean energy, and robotics. You can customize your portfolio to your needs. 3. Popular types of ETFs in the US. 1. Index ETF, index-based ETFs, example, SPY, S&P 500, VTI, total market. Suitable for long-term investing. 2. Bond ETF, bond ETFs, example, AGG. Stable, low risk, suitable for balancing portfolios. 3. Sector ETF, sector-based ETFs, example, XLK, technology, XLE, energy. For those who believe in the growth of a specific sector. 4. Commodity ETF, commodity-based ETFs, example, GLD, gold, USO, oil. Used to hedge against inflation risk. 5. International ETF, international ETFs, example, EFA, EM. Allows expansion beyond the US market. 6. Thematic ETF, theme-based ETFs, example, BOTZ, robotics, AI, TAN, solar energy. High growth potential but also high risk. 4. How to invest in ETFs in the US for beginners. Step 1. Open a brokerage account. You need a reputable company. Some popular choices: Vanguard, Fidelity, Charles Schwab, Robinhood, TD Ameritrade. Register online, verify identity, deposit money, and you're ready to invest. Step 2. Define your goals. Are you investing for retirement, for long-term accumulation, or for fast growth? Long-term and stable, choose SPY, VO, or VTI. Strong growth, add QQQ. Balanced, combine stocks with bonds, AGG. Step 3. Choose the right ETF. A simple portfolio for beginners, SPY or VO, 500 largest US companies. VTI covers the entire market. QQQ, technology. AGG, bonds. Step 4. Decide the amount. You don't need much capital. With fractional shares, you can start with just $50, $100. The important thing is to start early. Step 5. Invest regularly. Use the dollar cost averaging (DCA) strategy. Invest consistently every month, regardless of whether the market goes up or down. Over time, you'll have a reasonable average cost. Step 6. Patience and discipline. ETFs work best when held long term. The market may fall in the short term, but history shows it always recovers. The patient investors usually win. 5. Real example: you have $1,000 to invest, $500 in VO, S&P 500. $300 in QQQ, technology. $200 in AGG, bonds. Then, you continue investing an additional $100 each month. If the US market grows at an average of 7% per year, after 20 years, you could have over $50,000 thanks to the power of compounding. 6. Common mistakes when investing in ETFs. 1. Buying too many overlapping ETFs. Example: SPY and VO both follow the S&P 500. No need to own both. 2. Short-term investing. Trading frequently. ETFs are suitable for the long term. Short-term trading can cause you to lose fees and miss out on big gains. 3. Choosing high-fee ETFs. Some small ETFs have management fees up to 1%. In the long run, this eats away at profits. 4. Chasing trends. Thematic ETFs are attractive but highly volatile. Beginners should prioritize large, safe indexes first. 7. Comparing ETFs with mutual funds and stocks. Compared to individual stocks, ETFs are less risky. No need to pick the right company. Compared to mutual funds, ETFs are cheaper, more transparent, and easier to trade. Compared to individual bonds, bond ETFs are more diversified and flexible. 8. Long-term ETF investment strategies for beginners. 1. Simple one fund only strategy. Choose VTI or SPY, invest consistently. No need to complicate things. 2. Balanced 80-20 strategy: 80% in stock ETFs, SPY, VTI. 20% in bond ETFs, AGG. Helps stabilize and reduce volatility. 3. Technology growth strategies: 60% SPY or VTI. 30% QQQ. 10% AG. Suitable for those who want faster growth. 9. Lessons from U.S. market history. In 2008, the financial crisis caused the S&P 500 to drop more than 50%. But by 2013, the index had fully recovered. Those who patiently held SPY ETFs doubled their wealth afterward. In 2020, the COVID-19 pandemic caused the market to crash. But just a year later, the S&P 500 reached new highs. Long-term ETF holders still won big. Message: ETF plus time plus discipline equals sustainable wealth. ETF is the ideal tool for beginners investing in the US. It provides diversification, low cost, transparency, and flexibility. You don't need to pick winning or losing stocks, just trust in the entire economy. Start with small steps, invest regularly, be patient, and let time and compound interest do the heavy lifting for you. If you found this video helpful, please hit like and subscribe so you don't miss out on more financial and investment knowledge. Comment below, which ETF are you most interested in: SPY, QQQ, or VTI? I'll share more strategies in the next video.